Over the past decade, housing prices in Canada have absolutely skyrocketed, making it increasingly difficult for most Canadians who are first-time buyers to find affordable housing. And we've arrived at a point where the growth in the gap between disposable income and housing prices has priced out the majority of individuals below the age of 35 and continues to put a financial strain on the lives of the next generation. And although this is a growing problem for aspiring homeowners, what's often overlooked are the repercussions that have rippled over into the rental market, where renters are facing a market that is becoming increasingly competitive as well, and therefore unaffordable in many large metropolitan areas around the country. So in today's video, we'll take a closer look at the state of the Canadian rental market and the challenges facing renters across the country. And if you're a renter watching this right now, I'm sure you can relate to these struggles, so I'd love to hear your thoughts on the topic. Make sure to leave a comment down below, and don't forget to please leave a like on today's video. Let's get into it. Alright, so I bring up this issue because according to a recent report by the Canadian Mortgage and Housing Corporation, which by the way is typically referred to as the CMHC in Canada, the rental market in Canada is at one of its least affordable points in history. If that's not ringing alarm bells for municipal and provincial governments to step in and encourage property development, I seriously don't know what is. Now, the report also highlights that the rental market conditions are actually expected to further tighten, raising rents even higher over the next few years. This issue is compounded by strong immigration levels, of course, to Canada, which only adds to the competition for rental units as a whole. In fact, data from rentals.ca shows that the average rent in Canada was just over $2,000 in March, which is up 10.8% from the same month last year, and the average monthly rent for a one-bed apartment in Toronto rose 22.2% annually. That's massive. In fact, even here in my hometown of Ottawa, supply simply cannot keep up with demand, where entire forests are being cut down to build 15 to 20 unit buildings, with leases filling up months before completion of the buildings themselves, leading to application wars with dozens of applicants per individual unit. And it doesn't require a degree in business to understand that this only leads to the cost of products increasing drastically, in this case the products being rental units. Now, one of the main issues at play here is that as more prospective owners have been boxed out of buying their first home over the past couple of years due to increased prices followed by increasing financing costs, as we're seeing right now with higher interest rates, well, this is translated over into more demand also building up in the rental market alongside continued immigration. And again, none of this is truly more complicated than simple supply and demand that's being pushed around from the housing to the rental market. And to make matters worse, the CMHC expects that the housing correction in more Canadian cities is expected to end around the middle of 2023, which is very soon, with markets like Toronto, Ottawa, and Vancouver already seeing sales and prices pick up steam once again, despite financing costs still remaining high for the time being. Now, the way I interpret this data is that as aspiring buyers have watched average property values decline quite dramatically over the past year, they may still be able to qualify for a property at the currently higher financing costs. And in this case, it may be beneficial to acquire the property using a variable rate mortgage or say a 1 to 2 year locked-in rate, with the goal of simply refinancing the property at a lower rate in the near future, not necessarily to pull equity out, but simply to lower the monthly interest costs baked into the mortgage. But here's the thing, for the millions of Canadians that can't afford a home at the current prices and financing costs, and without a realistic on-ramp towards home ownership, more Canadians than ever will be fighting for the limited rental units alongside the hundreds of thousands of immigrants arriving to the country each year, which only leads to further increases in rental values as well. Now, this is a problem that's particularly acute in major urban centers, where the average renter is now spending upwards of 30% of their income on rent alone, leading to a situation where many renters are even struggling to make ends meet, let alone saving towards an increasingly inflating down payment. And for all the people who have lived under the narrative that renting long term is a better solution than buying, trying to invest the difference between what you'd pay on a home versus what you'd pay on rent, well, that's also coming back to bite many, where rents are increasing far quicker than wages are, financing costs have increased, boxing out the potential of buying, and the inflationary hedge that owning property has to offer is inexistent without having already purchased property, so it's really a lose-lose right now. Okay, so there's definitely a real problem at hand here, but what's the main cause? Well, if it hasn't been made clear, it's the limited supply relative to the massive demand. And newsflash, this will only get worse over the next decade, with policymakers seemingly burying their head in the sand to avoid the issue of pretending like we're not headed down a path of greater wealth disparity in this country. In fact, I've covered this on the channel in the past, but to drive the point home again, according to the CMHC, the pace of new home building is expected to slow in 2023 and not return to pre-pandemic levels until at least 2025 at the earliest, and that Canada will need to build an additional 3.5 million homes by 2030 to address the supply gap and restore affordability to the housing market. That's a lot of houses in only around 6 years. And realistically, that just won't happen. I'm calling it right now, and the CMHC has even revised its earlier projections and now expects new construction to be lower than initially forecast for the next 2 years, which is due to higher building and borrowing costs for builders, as well as constraints such as a tight labor pool, which are hindering the ability of developers to break ground on new home building. Now, if you're new to the channel, you might not know that I am a real estate investor and developer myself, and over the past 2 years, the speed at which projects are able to commence has severely slowed down in many regions, including my own, if not completely ground to a halt, depending on the type of project in question, resulting from slowed permit issuances and increased financing costs on projects from increased interest rates. And I'm well aware of the fact that many people despise property developers, thinking that housing should be a basic right here in Canada, which definitely does have some merit to it, but at the risk of ruffling some feathers here, in what utopian world would you have to live in to think that a country with among the highest taxes in the world already, and with 500,000 people coming to the country per year, could we push for affordable housing on a much wider scale? I mean, the money's just not there, and developers aren't going to work for free or pennies on the dollar. That's just not how business works. So to summarize, the unaffordable rental market in Canada is a serious problem that is affecting millions of Canadians. And while there are no easy solutions to this issue, it is clear that something will need to be done to address this issue before the country reaches the bottom of a debt-fueled spiral that eventually busts. It's quite unfortunate to watch unfold, and I feel for individuals who are currently stuck between a rock and a hard place, really, but I truly think that with the current legislation and policies that are in place, Canada's setting itself up for a difficult future as a country that once prided itself as being an enjoyable and equal place to live. Under this veil of equality, we're headed down a path of massive wealth disparity between the wealthy and basically everyone else. By the way, make sure to check out the links down below in this video's description to Questrade to get $50 in free trades when opening up a new stock market account, Newton, where you can get $25 for free of Bitcoin when you trade $100 on the platform, and if you want to check and follow your credit score more regularly, make sure to check out Borrowell. It is completely free to use. There's a link once again down below in the description. Thanks a lot for watching, and I'll see you in the next one.